Welcome to the BF Anderson Technical Report for April the 16th. Trend following is such an important strategy. Using moving averages is just a way to really simplify the process and for you to make smarter and better decisions. So let's get into the charts. We've got a lot to discuss here. As we know, the lower moving average is what is important right now. This is the NASDAQ on a daily basis. You can see that it has rallied above that lower moving average, and that lower moving average is trying to turn up. Now, I'm going to show you a study that I did over the weekend later in the video to help you understand how important these moving averages are. Now, on a weekly basis, you can see here that we have recovered back to the 35-week moving average, and the 35-week moving average is turning up. Now, the rule on this indicator is for both the NASDAQ and the S&P 500, you have to close above the 35-week for 2 consecutive weeks. Just like back here in 2019, we started closing first week, second week we closed above, and you can see good things started to happen. Now we're going to get into the monthly graphs. Now I've cleaned these graphs up a little bit, made some changes to them, just so it's easier to understand what we're looking at. This is the S&P 600 Small Cap Index. All we're really concerned about here is what's going on with the 10-20, which is the 10-month versus 20-month. Now realize the moving averages only get updated monthly, so we're into the next month, but you can see that the index is way down here, so the moving averages will continue to pull down and possibly give a death cross. Now on the S&P 500, we're in pretty good shape. As you can see, the moving averages have not crossed, and we're getting the index back up close to that lower moving average so far this month. The Value Line Geometric Index, very broad index, 1,700 stocks. You can see the same problem as the small caps, pulled way back. You can see that we got the death cross. The index continues to stay very low in this range. Therefore, the small caps and the Value Line Geometric Index are showing the greatest weakness. Now on China, now remember, this is the Golden Dragon China ETF. This is every Chinese stock that trades in the United States. We are now getting a golden cross. The index has pulled up above both moving averages, looking more constructive, actually. Now, this is the aggression index. What we're measuring here is how aggressive are investors. We're comparing, it's a ratio. We're doing a ratio of the NASDAQ to the consumer staple stocks. This is on a daily basis. You can see this is the 50-day moving average, which is in a downtrend, and we're finding that as resistance. We hit it, we pull back, we're close to it again, but we're still seeing somewhat of a risk-off environment. This is the same indicator, the aggression ratio, but we're doing it on a weekly basis, and we're looking at the 40-week versus the 10-week. Again, the rule here is it has to get above that 40-week and the 40-week turn up, which has not happened. The 3 economic indicators that we're looking at are the Treasury, the 10-year Treasury note. Looks like interest rates are kind of flattening out at a very low level. However, if we look at the price of oil continuing to plummet, it's really shocking. If you really want to do an analysis of how trend following works, go back and look at the price of oil back in 2014. It started a downtrend in 2014, and it is continuing 6 years later to continue to be in a downtrend. So trend following, you don't want to really argue with it, because once a trend establishes itself, it tends to last a lot longer than people realize. Now, this is the small cap index. Again, we are seeing improvement here. However, it is actually starting to develop somewhat of an uptrend. So we'll see. This is the put-call ratio. This is where we see fear and greed. This is extreme fear. This is extreme greed. We're kind of in a neutral area right now. Again, back to the S&P 500, looking at it on a daily basis, we are seeing a somewhat of a cup forming here where we're getting the low starting to come up the right side of the cup, and you can see here the moving average is starting to flatten out. This is good. Now, we would really like to see a breakout above the upper moving average, which would be the 50-day. We'll talk more about this at the end of the video. This is also the 200-day, just to keep an eye on that. It's really flattened out. It's not in a downtrend, but we need to get back above the 200-day moving average. Now, I went back and I looked at market bottoms from the past just to make a point about trend following. So it's important to spend time on this. This is very important because it helps you to understand what has happened historically, and basically, does history repeat itself? Well, it can. It really can. So what we have here is the market low in 1998. The market basically imploded due to a global currency issue and also the demise of long-term capital management. It was a big disaster. The first leg down was 28%. Then we recouped 53% of that down move. However, we rallied to the 50-day moving average, found that to be resistance, dropped again, and had a second low, which was a retest of the first low. Then we got going. But if you'll notice something here, the lower moving average never turned up. So if you would have gotten into the mindset that, oh, this is it, and then you said, well, wait a minute, the lower moving average has not turned up, it would have protected you from that retest. We don't know there's going to be a retest, but we need to be aware of it. Here's another example. Now, this is 2011. The first leg down here was 20%. Then it recouped half of that down leg, or 55%. However, the trend really never turned positive because, as you notice here, that lower moving average really never turned up. Now, you would have seen a little bit of an upturn in here, but the upper moving average is also in a downtrend. I would say that this would have pretty much protected you from making the mistake of buying in again up here and then experiencing that drop. This is what we call a W bottom. Now, I have another example. This is what we really want to see happen. This is what happened back in 2018. First leg down was 20%. However, there was no retest. And then you can see here the moving averages turned up. That gave you the buy signal. So basically, if you get a V bottom, pay tremendous attention to the lower moving average. In this case, the lower moving average is the 25-day moving average. And then if it decisively turns up, you could probably start getting back into the market. One more year to look at. This is 2009. Now, this is a very tricky bottom. This is the most tricky bottom that I've looked at. You got your first drop. You got your retest up around the 50-day. You actually started to see the lower moving average turn up, but what made things interesting was the upper moving average, which was the 50-day, did not turn up, and it actually became the lower moving average, and then boom, you had the retest. So again, I just have to say that if you follow these moving averages, you're going to be having much better successes than just guessing. So like here's where we are today. We've gotten our first initial drop. You can see here that the lower moving average is pretty flat, but trying to turn up. But my advice would be wait for the turn up in the moving average, and also pay attention to the direction of the upper moving average, which is also continues to be in a downtrend. Okay, let's get into the top 5. Here's what is also interesting. We're finding a lot of good stock patterns right now, given the difficult market situation. This is Dexcom. This is a company that provides a glucose monitor. You can see here that the 10-day moving average has moved above the 50-day moving average. The stock is broken out. Looks very good. Looks excellent. This is Moderna. This is a company that is working in phase 2 trials on a vaccine for the coronavirus. Does the market believe they have something? Perhaps. The stock is breaking out on when they announced that they had this vaccine. This is the volume that came in, which was about 75 million shares, and the stock normally trades 16 million shares a day. So some big institution with a lot of money knew that this company really probably has something. Keep an eye on Moderna. Newmont Mining, this is gold. Gold hit a new high here recently. Continues to look strong. This is another company working on a vaccine. In fact, I saw the CEO interviewed recently. Very impressive. And he's basically saying we're going to have a vaccine, and it'll be a vaccine that'll be good enough where we just kind of forget about this coronavirus, just like we got to forget about things like polio. So anyway, you can see here the stock is trying to consolidate after a major up move. Let's see. Okay, here, last but not least, this is Tesla. Tesla is an interesting situation. A lot of people don't remember this, but I do. The company came out with a secondary offering for about $2 billion when the stock was up here around 90. Now, that's an equity injection. That's not debt. That's equity. So they're pretty well capitalized. Their balance sheet looks pretty good right now. And that last quarter, they came out with record sales. So basically, you're seeing here what we call a cup formation. There's a cup here, then you got what you call a descending handle. So here's the bottom of the cup. You're coming up the right side of the cup. Here's the handle. Then you got the breakout. This is pretty textbook. Very classy looking situation. Tesla does look good. And if you really think about what's fundamentally going on with the automobile industry, these guys could really come out on top. So definitely keep an eye on Tesla. So that's it. If you have any questions, let me know. Thank you very much.